Welcome to another week in review. We're going to be looking at the trading week of May 19th, 2025. Start off with some data. It's pretty light this week, thankfully. So Monday, I have noted that Fed speakers are speaking most of the morning, most of the day actually, all of the morning, and then 11 or 1:15 p.m. we have Logan speaking as well. As far as market moving data outside of that, not much to really pay attention to. Tuesday, 1 p.m., we have a Fed speaker. 7 p.m., we have Daly and Hammock speaking as well. So again, Tuesday, pretty light on data. Really just those Fed speakers there. Wednesday, it's not listed on Forex Factory here, but we do have a 20-year bond auction at 1 p.m. Other than that, not much to pay attention to. Thursday, we have jobless claims, 8:30 a.m., 9:40 manufacturing and services PMI, 10 a.m. existing home sales, and then 2 p.m. we have Williams speaking on Thursday. Friday, we have new home sales at 10 a.m. and then we have the FOMC stability report, which is released at some point on Friday. I don't know if that's actually going to matter for the market, but something to note when that comes out. As far as earnings for this week, again, pretty light. Not much I'm really noting here. Tuesday morning, Home Depot. Wednesday morning, Target. So those two will be interesting. And that's really it for this week. Not really much I actually care about outside of that. You could look at Snow. You could look at Zoom. But as far as the big guys, really I think it's going to be Home Depot and Target to pay attention to. So jumping into last week, just as a quick overview, a pretty crazy one. So the week before, we talked about this a lot. Week before, we talked about the critical level of the 5720 area, which is a higher time frame level we've spoken about. We had a nice 7-day balance form, and then we just, on headline news, of course, we gapped straight over it, and then we had a huge amount of acceleration in the Euro session on Sunday night, last Sunday night, which just basically started off what is essentially a trend week, setting the low on Monday and setting the high of week on Friday. So instead of having, a nice regular breakout from 7-day balance that everybody could catch, they didn't let anybody into this move unless you were already long, sitting long into the weekend from this balance range, which I was not. They didn't really let anybody in, and they just shot it straight up and ripped it all the way up to another critical high time frame level, which is the 5950 area, which is the 2025 yearly open range. So huge move up, really clean double distribution profile that we had form on Monday. Continuation Tuesday, again, a trend day basically Tuesday, following P-shaped profile. We had an inside day Wednesday. That actually turned into a beautiful trade here on Thursday. One of my favorite setups that we have that exist is the inside day look above or below and fail. So inside day, just to quickly talk about this, inside day rules are generally you want to follow the break and continuation of the inside day's range, or you want to look for the opposite extreme if one side of that range fails. So basically what happened on Thursday, we had the RTH low right here at 58.90s. We had a overnight sell, and then we opened basically right around this low. So we opened right at Wednesday's inside day low. We had no ability to sell below it, and then we finally had some acceleration from the open range back above. The moment this low was reclaimed and we stayed inside this range, it was long all day for me. So these types of days often can lead to trend on the opposite extreme. Anytime we fail one side of an inside day, I'm looking for the other side of the inside day to get tested. So we had some longs get put on around the lows, and we had a really nice move all the way back up into the inside day highs. That was a beautiful day. And then Friday was a continuation from the trend week. We had a 3-day balance range form here with 59.44s at the highs. And again, we had the same type of thing happen where we couldn't really sell below the POC of the prior trend day, and that got bought right back up, and we had a slow, grindy trend day all the way up into the yearly open range, which is 59.50s to 59.70s area, basically testing it perfectly up here. And then Friday, after hours, we got the Moody's news of U.S. credit being downgraded, and that sold us pretty sharply right into the ETH close. So the big question this week for me is, does that actually matter? So the small sample sets that we have as of recently, we only have two, right? We only have 2011 and 2023, I believe it was. The immediate reactions of those downgrades were continuations for a few days, so a few percentage points down, and then ultimately, bought right back up. So the real question to me is, I'm ignoring the data. I'm ignoring the macro picture of, everybody online right now is jumping to say, okay, well, this is the thing that is going to sink the market. It's a huge deal. I don't really care. All I really care about is how price is trading around these areas that are quite defined on higher time frames, and I think that's all that we really should be concerned with. So from a higher time frame perspective, the market is very extended to the upside. So we had this huge gap up, this huge Globex gap that we have still open here too. Just very, very extended, a very emotional market, tons of buying, tons of flow coming into the buy side, smashing above the ask basically the entire week, especially on Friday. It's very extended to the upside. And a lot of the time what happens when we start getting into these higher time frame resistance levels, when the market is really extended like this, is we can easily have consolidation and a pullback and potentially liquidate some of those weaker hands that we're buying emotionally up into the highs, because that's certainly what it looks like to me right now. And as far as where this high is formed, it makes a lot of sense to me. So what I'm really paying attention to Sunday Globex and Monday is there an immediate reaction and continuation from the Moody's news that happened, and is that potentially some sort of catalyst that could take us down into back into last week's the meat of last week's range. So be looking at 59.50 to 59.44. So we're going to be looking at this range, this basically the lower distribution from Friday's range, you can call it for simplicity. If we gap below this, or if we if we open around here and we can't accept above 59.50s, then I'm going to be looking for the short side to basically clean up this structure in here, and come back down and test last week's POC down into 59.08s. So if we can't accept above this early, I'll look to be a seller, and I'll look to see if we can get that continuation drive down to last week's POC, back into the meat of last week's range, to see what's going to happen around here. I think it's entirely possible, if we're down into 5900s, that we come down and we start testing that Thursday low down into 58.84s. So a strong market will shrug this off immediately and will accept above 59.50s right away. I don't think that's as likely as probably coming down into last week's the meat of last week's distribution and range, and testing down in here to see if there's interest for buyers continually buying, or to continue buying, I should say. So what's going to matter is last week's POC down into 58.85s. If we see decent lows start to form here, if we see structural bid form, and we can start, building a balance range basically in the meat of this distribution, and hold this, then again, I'm going to look to see if I can be a buyer down into these lows to get the continuation move back up. Where things get challenging for buyers, in my opinion, is if we start losing Thursday's low. So if we start losing 58.84s, then the move to me would be down to 63s. And this range would be the line in the sand for buyers this week, and honestly probably for the rest of the month, in my opinion, because we are getting into mid-month here. It's after OPEX. If we start getting below basically like the 58.80s range, there's really no structure below this that I think holds, and I would assume that we liquidate, or at least we continue to sell back down into January lows, back down into the 100-day and 200-day stacked moving averages right here, which could easily act as a magnet. And this, to me, would make all the sense in the world. If we backfill this, we flush out weak hands potentially, and we start to find a low somewhere in here down into 57.20. So this is obviously a pretty big range, but I think as far as what could happen in the next couple of weeks, immediately, if we can't really accept back over the early open, then cleaning up this structure lower makes sense to me. And where I think the confirmation of this going lower would be 58.80s to 58.60s. If we start offering this, then I would assume that we come back down, we test this gap, we test these moving averages, and I'll stay on the sell side below this, and I'll try and see if we can drive all the way down into here and see if there's any interest from buyers down into this range. So that's how I'm going to play ES. Again, if we have acceptance above 5950s, I'm not touching. I will remove the sell button from my computer, basically. That's how I'm going to look at this. I'll stay on the long side. I'll keep looking for us to continue this driving higher. It's extended, of course, but at the same time, it doesn't matter if there's continued pressured buying, and we keep just grinding this higher. So a very strong market is going to continue to accept over 50s, and I'll look for 6020s, and then potentially just see how far this can drift. But at least as far as, in my opinion, where this is stopping, where that news was dropped, everything kind of lines up to me that this range here could dictate we see some structure cleaned up lower. That's my opinion, at least. So I'm trying not to have a lot of bias going into this week, especially considering the weekly and the daily are still one time framing up. There's no sense in obviously trying to pick a real top in the market, but I think as far as where we can use a gauge, the lower distribution of Friday and 50 to 44 will give us a good gauge of the immediate term of this market, and whether or not the meat of last week's distribution gets tested, and where buyers really need to show up in the short term if this market wants to stay continuing upward, would be 59.80s to 60s down in here. And then below this, it'll just be a sell back down to fill this in my opinion, and potentially find a low somewhere in here. From a higher time frame perspective, like if we're looking at the daily charts or the weekly charts, basically anything above 5720 has the potential, in my opinion, to form a higher low for continuation back to all-time highs. That would be my general stance. That's not really an actionable trade, obviously, saying this now, considering we're 220 points above that. But from a bigger picture perspective, that's kind of how I feel about it. I'll absolutely be able to short this on an intraday basis into the lows, but as far as bigger picture, I think anything above basically 720s, could potentially has potential to form a higher low for this to go higher. So NASDAQ, same situation. The other thing I should note here too is the NASDAQ didn't lead on Friday. So anytime I see divergences like this, where the NASDAQ, printed an inside day, it wasn't able to take out Thursday's high. It struggled all day. It was like it was trying to move through quicksand the entire day. Anytime we have divergences like that, could also be a warning sign. So that is also why I'm of the opinion we could see a bit of pullback and a bit of cleanup of structure lower this week. Friday printed an inside day on NASDAQ, which is actually extremely helpful for this week. So especially Monday. So again, going into the inside day rules, breaking continuation of the inside day can set the tone for that day's range development. So if we see acceptance above or below the inside day higher low on the NASDAQ, that's going to be a really good indication, in my opinion, of what kind of day and what kind of action we're going to see on ES, right? So we had a really huge trend day up. We closed the regular session into the highs. It was dull all day Wednesday, or all day Friday. It was dull on the NASDAQ. So weakness again to me would be seeing acceptance below 59.50 to 59.44, and that's likely going to be confirmed by this inside day breaking to the downside. So if we see 21.320s, this inside day low, if we see this break to the downside, then again, I'm going to be looking to stay on the sell side to clean up some of the structure down into the lows, probably down into the 21,000 area on the NASDAQ, I would assume, and then see if we have any interest from buyers down in this range. I think if 21,000 goes, then again, it's going to be the same situation. Very likely, there's not much structure here at all. More likely to me that we'll continue selling down into that gap at 20,700s, potentially as low as 20,005s to 20,004s, again into the 100-day and 200-day moving averages on the daily time frame. So, and again, a higher low could form on the higher time frames anywhere in this range, and that's really just going to be market generated, and we'll have to see take that day by day. Not try and catch a knife, just wait for something to really make sense, wait for some balance to form, some structure to form in areas where it wasn't previously, like down in here, and then see if there's interest from buyers. So that's how I'm going to play this week. Again, pretty light on data. It's not the following week is Memorial Day, so Friday will be the day before a long weekend, so just bear that in mind. Especially bear that in mind too if you're playing options and you're looking at weeklies or 2 weeks out, you're going to lose a day if you're playing the following week. So things to keep in mind. I think this week should be, hopefully some good price action. Some of these days were tough. Like Wednesday was terrible. Like from a trading perspective for me on Wednesday, I called it early. This range was just brutal. Thankfully, Thursday really made up for that. Friday, I didn't really do much of anything either on Friday too. So hopefully we have some decent action this week. I think we have some pretty clear areas where we can watch and manage risk and kind of make some sense of this market. Again, the Moody's downgrade, it's a headline in a perfectly placed location, right? So we have a very critical spot on higher time frames that headline happens to drop perfectly. So those things kind of align. Don't read too much into the headlines. Just focus on where price is trading, and where it can go. If a headline happens to coincide with where price is trading, and is a catalyst to move price in one direction where it makes sense, then that's more what I'm interested in, and just looking at these major areas that can actually move the tape here. So hopefully that helps. If it does, please like the video, please comment, please subscribe. It would mean a lot to me. Thanks for your time.